I have some members of our team here with the Altene team that's going to be presenting tonight. First, myself as James Altene with the team leader. We also have Jane Konia, which is one of our major team players and agents here on the team. We also utilize Joe Galvez with John Adams Mortgage, and he's like one of our preferred lenders that's here too as well. We had about 10 to 12 people that actually signed up. Looks like not everyone was able to make the call on this particular one, but like I was mentioning earlier, we do have it recorded for those people, so that way we can get it out to everybody. So I thought, in order to respect people's time too, at the same time, I thought I would kind of get us started with the PowerPoint presentation. And let me start off by sharing my screen as give it a second here. Okay. So hopefully everybody can see this with our home buyer presentation. I'm just gonna click on, here we go. So again, I'm James Altene, and we also have Jane Konia that's on here that's gonna be talking throughout the presentation, along with John, I'm sorry, not John, Jill that's also going to be on here too, and another member of my team that's on here tonight too is Maria. She's our marketing director for our team as well. So so first off, congratulations, you're taking the first step on our home ownership journey. So this is like the first opportunity for you to take a look and see if buying a home is to your best interest. So yeah, Jane.
So what we're going to be covering today is we're going to be starting out with, figuring out what's, kind of fears and facts about looking at getting into the market, what's going on in the market today. Then we're going to walk through the 10 steps of buying a home and then talk about where you go from there. First thing we wanted to ask, though, is there anything that you guys wanted to have covered while we were doing this today that you were specifically looking to find out, or, kind of, are there any concerns from anybody about what they've heard about the market, or, hesitations, or what do they know about what's out there? Any thoughts? If we don't, that's fine. We can go through the stuff that we're going to go over. So, but yep, please feel free to add. We'll have some time for questions at the end. So
awesome. So let me jump right in here. Let's talk a little bit about what's going on in the market today. Okay. So as you probably have heard out in the market, from interest rates being, during COVID, sub 3 and 4% early on in 2020 and early 2021, interest rates started soaring up to 20-year highs to up over 7.5%, roughly about 4 or 5 months ago. That kind of put a little bit of a stall on the market because it kind of scared a lot of buyers that were out on the market. And then kind of where we're hovering today is we're back down to about 6.5%. So even though as you guys have been seeing in the announcements that the short-term interest rates have been escalating, every quarter, really what we take a look at is a lot of the mortgage interest today is tied to the 10-year Treasury bond market more so than the short-term interest rates that you see as far as rate hikes. There's a multiple, they look at all kinds of things, not just the short-term interest rates that are in there. With more potential, the interest rates could be potentially coming down within this next year, which is real exciting. So what we're hearing is when we had that 7.5%, that's about the worst that we're going to be, unless any surprises coming up in the marketplace down the road. But as of right now, investors are telling us that the interest rates could be even less than where we're at today. So a lot of people are going like, well, what do I do? Do I wait or do I buy now? So let's talk a little bit about the housing market. We've heard, I've heard a lot of things going on where buyers have asked, is the market crashing? Is home homes, losing, their profitability and is going down in price. And actually that's kind of furthest from the truth. The only thing that the interest rate really did was slow down the market a little bit. So to give you an example, in December of this past year, home pending sales in just Southeast Michigan is actually down 6.9% versus last year, to indicate a little bit of the slowdown. The average days on market have increased to about 28 days. And for some people that have been in the buyer's market right now over the last year, they're going like, okay, what's going on? Because it used to be pretty much any house that you put on the market a year and a half ago would sell within the first 7 days and sell for market price or up to 10 to 20% over. Whereas now we're getting into a much more balanced market, and the housing, it takes a little bit longer for a home to sell. And it really depends on the quality of the home, if it's priced right. There's a lot of different things that can make the difference in when it sells, but you never know when the house sells. I can give you a fast example. I showed a house out in Shelby Township over the weekend that was literally on the market for 22 days. And, my client was pretty excited about it. We got ready to put in an offer, and then out of the middle of nowhere, this house becomes a multiple offer, highest and best situation. And they finished out Monday with over seven offers on this particular house. So things like that can still happen in this marketplace if it's the right house and it's priced right. So then the next question that kind of gets posed that I hear is, well, why do I keep seeing prices decline when I'm on Zillow or Realtor.com, or my agent has a search engine for me and I'm seeing a price decrease on a particular home? Well, there's a lot of factors that go into that too. Is one, a lot of the homeowners are still not pricing their homes right. And in some cases, they're still trying to overprice their house. So then they're realizing, because the average days on the market is a lot longer, they're starting to take a price drop. Or the inexperience of the agent freaks out because they've never been in a more balanced market. So they think if the house is not going to sell in 14 days, that they try to promote taking a price drop on the house. So, there's a lot of different things in here. It has become a more balanced market, but people are still getting about 100% their list to close price. That's the numbers that came out in Southeast Michigan, is the average for December of all homes sold is 100% list to close price. So what is the forecast for 2023 as far as the future home values? Well, the forecast for first quarter right now of this year is another increase of about 5.4%. So homes that you're looking at right now could be worth about 5% more by April 1st when you go up. So the value of the home is still going up in price, not declining. So let's see. Oh, and I threw in here that interest rates could be down as low as 5% by the beginning of 2024. So with also the rental values and prices going to be, has been up over 14% in the last 12 months. So my conversation that I had earlier this week was, should I wait till 2024 to buy a home? Well, if you wait a year for interest rates to be lower, that same price of that home could be worth anywhere from 5 to 10% more. And so you're paying more by waiting a whole year. And if interest rates actually drop by 2024, we could get into a seller's market again, where you could be paying 10 to 20% over versus now paying list price. And in some cases, getting a discount if the seller gets desperate and wants to sell the house. Any questions with some of the numbers with the current marketplace that's going on right now? Good.
James, you mentioned about people not pricing their houses correctly. Whatever happened to like the having an appraisal that really valued your home correctly? So you knew, I realized that everybody takes comps in the area into their consideration. And I don't know how long those comps last, but in today's market, with the higher interest rate and the home values decreasing a little bit versus what we were seeing like 6 months ago. Is there, I guess the question is, how does the home buyer even know if they're pricing it correctly or if they're overinflating their property without getting a proper appraisal?
Great question. So you have to, one of the things by working with a buyer's agent, when you're looking at a house that you find that you really like, we can quickly run some comps in the local market area to find out if the home is priced right. And no matter, even if you get if the seller gets an official appraisal on the home, at the end of the day, it's what the buyer believes that house is worth and what the seller believes that they're willing to sell it for. It's what comes out to be the true value and what the market is. So going back to that house in Shelby Township, they priced that house about $5,000 below value of what I comped the house at. And it was just enough to create a multiple offer situation where they wound up getting 7 offers on the house. And by the way, my client offered over $20,000 over asking, and it wasn't enough. So it's, at the end of the day, it was that buyer, the other buyer that won, believed in their heart that house was worth more than $20,000 over asking. And that's why they won the price of that house. So it's really, at the end of the day, what the buyer's willing to spend for that house and what the seller's willing to sell it for. Comps are a number that's based on the history of that market. And it's the same thing with an appraisal. It's based on the history of that market, but it also depends on the condition of the property and how they want it and what they believe the values were. Did that help?
Absolutely. But I do have one more question.
Sure.
So it's interesting about the appraisal. So the appraisal is taking in other properties within the area versus maybe having, some distinct information about, like the quality of your home or something. Because like, I feel like I'm always looking and I'll see a home that's priced close to a home that might have like a little better than like maybe standard or builder grade. And then you'll see a home that's in the same area that's priced the same, comparable, that is extremely dated.
Mm-hmm. Well, in this market too, backing up a little bit, 2 years ago and even a year ago, everyone could get away with pricing it at market price, whether it was updated or not, and everybody was receiving multiple offers, highest and best. Today, those homes that are dated, because it's a more balanced market, they're actually getting penalized, and they typically sit on the market a little bit longer. And in some cases, you're going to be able to negotiate and get a little bit of better deal because the homeowner did not make the necessary updates. The buyers are being a little bit more picky because they're paying more through the interest rates. So that's where it's kind of changed today. But, at the same time, an appraiser might still give value or close to value. There's multiple things, and it could be a sidebar where we could talk a little bit more about that. But the quick answer is believe it or not, even at the end of the day, no matter what the house appraises for, no matter what comps that we do, it's what the buyer is willing to spend for that house and what the seller is willing to sell it for. That's what the magic number truly is.
Hey, Jim,
It seems fair.
Can I butt in?
Yeah.
So, hi, Joe Galvis, John Adams Mortgage. One thing I think that I can't stress the importance of enough is having a realtor or realtors that you trust. They're going to be your gateway to properly placing an offer on a property. When it comes to an appraisal itself, that's something that's done on the lender side, and a good realtor will have you protected. So that way, if the appraisal comes in low or lower than anticipated, you will know right away, did I go over asking? Did I do an appraisal guarantee? Or is this something I can walk away from and not have to worry about losing my earnest money deposit So there are ways for protection to keep you from buying a house or overpaying in a way that you don't want to, if that makes sense.
That does make sense.
Okay, perfect.
Great questions. So, all right,
So
Jane.
next we're going to talk about, just reiterating the reasons of why it's still a good time to buy. Even though mortgage rates are now being projected to go down, as Jim discussed, in the next year, hopefully to around 5%. If the percentage, the mortgage rates decrease enough, you can always refinance. But right now, we've kind of seen as we've discussed, a slowing down a little bit in the market. The houses are staying on the market a little bit longer, so it gives buyers an opportunity to actually be a little bit choosier, to really find a house that they like and have a chance of getting it, unlike last spring's market. And so in a way, to me, it's always a win-win, because if interest rates not anticipated to, but if they do go up, you've locked in at a lower rate. But if they do go down, you can always go down and you can take advantage of the prices before they go up farther, as they're anticipated to. Also, it's just always a good idea. Home ownership is always a better idea than renting if you think you're going to be there a significant amount of time, because you're building equity. And historically, real estate appreciates. You can pay down your debt earlier if you want to. And it's, as right now, there's a lot of hesitancy about the market, the stock market, and worries about whether or not we're going into a recession. Historically, real estate has been the best hedge against inflation. And there's just simply the, pride of ownership. It's the stability and security of owning a home, being in a community, being in a neighborhood and owning in it, being able to do whatever you want with a house, and tax advantages for the mortgage interest rates also. So Jim's going to talk a little bit about concrete examples about renting versus owning in our local markets here.
So I chose Genesee County and Oakland County. I have Oakland County here too. These are a couple of the counties that we do a lot of business in. And for example, in Genesee County, which is cheaper to buy a first-time home buyer home, the median the median home price right now in Genesee County, including all cities, is about $200,000, whereas in Oakland County, it's about $350,000. 5 years ago in Genesee County, the median home price was about $144,000. So you can see how the values consistently go up. And in the last 25-year history, if you were to own a home over the last 25 years overall, the average increase has been about 5% over the last 25 years. So if we were to take and buy a home today for $200,000, which is the median home price in Genesee County, with your down payment and everything, based on the current interest rate, your principal and interest, taxes, and insurance on that house is going to be about $1,556 a month. Okay. So based on that, in 5 years, by you owning that home over the next 5 years, we figured out that you'll owe about $168,976 on that same home. The value of that home, based on 5% increase a year, will be now worth $243,000 5 years from now. And the equity that you've built over the next 5 years will be about $74,000. So it's definitely a nice investment over the next 5 years, and you own the asset. Renting a home in Genesee County, and this is even light right now. I have an investor that has anywhere from $225,000 to $250,000 homes, and he's renting them for $2,100 a month. In Genesee County, the average for renting a $200,000 home is about $1,800 a month. So what you're doing is you're paying down the landlord's mortgage, and over the 5-year period, you're literally paying $108,000 towards the landlord's mortgage total, versus you having an equity of about $74,000 over the term of 5 years. And that's assuming that the rent doesn't go up. And in the last 12 months across the country, rents have gone up 14%. So in Oakland County, the median home price, purchase price is about $350,000 to purchase a home in Oakland County. So with down payment, closing costs and everything, once you pay all of that, your average payment is about $2,832. Same thing, principal and interest, taxes and insurance all rolled in together. At the end of about 5 years, you're paying down that loan to about $311,256. The value of that home, taking it out by increasing it 5% a year, that same home could be worth $446,000, which gives you an equity of about $134,000 towards buying your next home. And you don't have to try to buy your dream home for your very first home. You can keep moving and stepping up every step of the way, and before you get that ultimate dream home. And in my lifetime, I've owned over 8 homes to get the home that I truly wanted before I downsized now. Versus, I made a mistake up there, so excuse the renting a home for $200,000. I meant to put that at $350,000. So if you're to rent a house in Oakland County at $350,000, the rent is about $2,800 a month towards the landlord's mortgage, or after 5 years, you're paying about $168,000 towards the landlord's mortgage. So a huge swing in renting versus owning a home. So.
Sorry about that, I'm muted. For the steps that we're going to go over for buying a home ownership is, the decision to buy in the first place, finding an agent, securing the financing, identifying what your criteria would be when you're looking for the house, finding your home, making an offer, performing the due diligence between the offer and the close, what the close looks like, moving in, and the service you'll enjoy from a lifetime from us. So we're going to go over those. And the first decision is the decision to buy a home. And if you've decided that you're interested in buying a home, the things you need to do is you need to line up your finances, whether it's saving for a down payment, some of the closing costs, your earnest money deposit, which we'll go over, inspection and moving costs, whether it's talking to someone, if there's somebody that's going to help you buy the home, and coordinating on that. And with that, we're going to segue into Joe talking about the process of that, of getting the financing and working on that. So, I'm sorry, Jim, did I mistake it? Did I think Joe was?
Yeah, we're gonna talk about how to hire an agent real fast, and then we're gonna get into it.
I'm sorry, I misspoke. Okay, go ahead and go with that.
So totally fine with that. So a couple of big things is that whoever you hire as a buyer's agent, keep in mind that you really want an agent that's on your side. I mean, this is one of your largest financial decisions that you're making. And you really don't want to work just with a listing agent. Keep in mind that they represent the seller, not you. I mean, naturally, if I get a call on one of my listings and they say, hey, can I see the house? I mean, absolutely, I'm going to show potential buyer one of my listings. So I'm trying to help sell it for my seller, but I have to disclose that I'm working with the seller, not the buyer. And so if you really want someone to work for you as a buyer, you really need to hire a buyer's agent. The cool thing about that, and so many people don't realize this, is that you don't pay the buyer's agent commission. The seller does, unless for any reason that you wanted to go with a for sale by owning home, and we can't negotiate a rate with the for sale by owner, at that point, that's the only time that you have to pay the buyer's agent's commission. But I can tell you in our experience, we've never not been able to negotiate our rates with even for sale by owners in order to help you get a home and then give you premium representation, because you want somebody to represent you. We also have a trusted team of vendors to work with, lenders, inspectors, et cetera. So we kind of help streamline that for you. If you don't know, I mean, we have a few different lenders based on your needs, as well as top inspectors, top contractors, painters, things like that. So we have all of that at your disposal. With that, another thing that a lot of people don't realize is that there is what they call a buyer's agreement between the buyer and the agent. in which an agent would come to you to have you sign. Now, it's what the mutual expectations are done, put in writing, how we are committed to you as a buyer and our fiduciary responsibility, and what your responsibility is to the buyer's agent. However, here is the cool thing. It's not a contract like signing a contract and buying a house. If you sign an agreement with a buyer's agent and you find that they're not exceeding your expectations, don't let any agent tell you it's a binding contract, because in the state of Michigan, it is not. It is a buyer's agreement and an exclusive rights agreement, and it actually says it in the contract that you can terminate the employment of the buyer's agent at any time during the course of representing you, by text, by email, or by calling them. So you are not locked in, but you do want to sign that buyer's agency agreement, so that way you both understand what the fiduciary responsibility is with each other, and then they can properly represent you throughout the transaction. Okay. Now, we would like to chime up Joe a little bit. He's going to talk to you a little bit about some of the different financing options, and he might have to tell me to go to the next slide when we're ready.
Okay. Hi, everybody. My name is Joe Galvis with John Adams Mortgage. Just here to help you out, answer any questions that you have. I think, Jim, we're going to do questions at the end, or are we going to take them as they come?
I think for this part of it, let's take the questions at the end. So write down your questions so we can answer them at the end.
Okay, perfect. And then we'll go from there. So if you want to go to the next slide, Jim. So part of the mortgage approval process, and the question I always get from clients is, when do I get approved for a mortgage? Joe, I'm not looking to buy into the summertime. When should I get approved for a mortgage? My answer is always as soon as possible. Even if you're not looking to purchase until the summertime and we're maybe 6 months away, 7 months away from when you're going to be in market, that time allows us in the beginning, 6 months earlier, we can identify any red flags that you may run into. It also allows me time to work with you if you don't qualify. It gives me 6 months to overcome any deficiencies, 6 months to help you raise your credit score, all that stuff. So I'm always going to tell people the first thing to do is to contact your mortgage loan officer and discuss your financial goals. Once we get on the phone, we have a few options for you. You can fill out a mortgage application is always the next step. We can do that online. Everything these days is designed to be done online. So we can do everything through your phone, through an app that we have, or you can come and sit in my office, or we can do it over the phone. And then once the application is done, you can upload your mortgage documentation. For most people, for 80% of the people out there, the documentation is pretty standard. 30 days of your most recent pay stubs, 2 months of your most recent bank statements or asset statements, wherever the money is that you have that you're going to be using for your down payment, your closing costs, all that stuff. 2 years of W-2s and driver's license. There are some differentiation between, there might be some situations if you're self-employed, I'll need taxes instead of pay stubs, but for first-time home buyers, these documents are going to represent probably 90% of the people that are going to be buying a home. And then after you fill out the application, I have your full documentation. I will issue an approval letter for you, and you can go out and go shopping. We also offer another service here that's called a good to go loan commitment. I'll review that a little bit later in the slides, but that is also another option to help you out there and make you a little bit more qualified of a buyer. Okay, Jim. So we offer a bunch of different programs. I've worked for a lot of lenders in my career. I've worked for large banks, the largest national lenders that you could find, online lenders. I've never worked with a lender that had as many programs available as John Adams Mortgage has. We've got 3% down conventional conforming mortgages, 3.5% down FHA. We've got 0% down rural development loans. And I think the big one that's going to help a lot of people is also going to be the MSHDA program, or one of the top MSHDA lenders in the state of Michigan. And we'll go over that in a little bit. Go ahead, Jim. So this is probably the original first-time home buyer loan, which is home ready, home possible. This is a conventional loan a 30-year fixed rate conventional loan, but it allows for a little bit different allows for a little bit lower of a down payment. You can put as little as 3% down. If you qualify for the mortgage, and it's a little bit trickier to qualify for this than a standard conventional loan. If you qualify, you get a lower than market interest rate. You get lower than market mortgage insurance. Okay, so very two good advantages for this. All the other things are the same between this and a standard conventional loan. However, there is an income cap on it. So it's going to require a little bit higher of a credit score than a standard conventional loan. And there is an income cap. So you tell me the address, each income cap is specific to the address. We'll look it up and we'll see if this is a loan that you could actually qualify for. I use this probably for about 60% of my first time home buyers. It's a really good program. Okay, Jim. New for 2023. I don't want to get too detailed in here, but there's something out there called loan level pricing adjustments. And believe it or not, most people think that when you're getting a mortgage, your interest rate is based solely on the credit score. It's not. Your interest rate is based on your credit score, is a huge factor in that. But it also depends on debt to income ratio, on how much you're putting down, on the loan amount. There's all these factors. For this loan, that's a Fannie Mae product only. Fannie, you may hear me say Fannie or Freddie. Those are conventional loan regulatory agencies that are out there. So for Fannie only, Fannie has said, you know what, for 2023, if they can qualify for this program, we'll remove all those loan level pricing adjustments. So we're no longer going to get hit for a low credit score. You're no longer going to get, priced poorly if you're putting, if your debt to income ratio is high compared to someone that's low, or you're putting a small down payment versus a large down payment. So basically, if you qualify for the mortgage, everyone gets the same interest rate, regardless of credit score and all those other factors we talk about. Again, maximum loan amount is still the same for conventional loans of $726,200. Concessions are allowed, and this particular product will allow for 100% of the average median income of the area. So it gives you a little bit higher of an income cap. Then you can make a little bit more money using this program than you could using the Home Ready, Home Possible programs we just talked about. Okay, Jim. FHA mortgages. This is the typical program that I get a lot of people calling me for. I want that FHA first-time home buyer program. FHA is a very good program, and it gets confused with the first-time home buyer program, essentially because for a period of time, it was the lowest down payment option available at 3.5%. My first home I bought, I used an FHA loan just because I didn't want to put 5% down for a conventional, so I bought it with a 3.5% down. So it's a very good program, but essentially this is, and what makes this so great, especially first-time home buyers are usually younger, they don't have fully developed credit, or they might have poor credit. FHA is specifically designed for folks that have limited credit or less than perfect credit. Okay, there is an upfront and a monthly mortgage insurance that is charged. As the government, to keep the program funded, FHA does charge an upfront mortgage insurance premium. We roll that into your loan amount, so at closing we finance that, and then you still have your monthly mortgage or your monthly mortgage insurance for the life of the loan on FHA loans. Okay, Jim. USDA is a very good product. However, it's limited in scope, where not every home in the state of Michigan is going to qualify for USDA rural loan. So that's the first big thing right now. Depending on the areas where you're looking, it may not even be an option. If you're more north in the Grand Blanc, Brandon, out in that area, your opportunities start to open up. And every month they change, they open areas, new areas, and they close existing ones. So it just depends on where they want the loans to be written at that point in time. But the good thing with this is it's no down payment required. So you can literally purchase a home with no down payment. Okay. There are household income limitations, just like in the previous loans. Everyone over 18 that lives in the house, whether they're on the mortgage or not, they have to income qualify, meaning we have to put all your income into a pot, whether they're on the loan or not. And if you hit that income ceiling, you won't qualify for the loan. So it's not limited to first-time home buyers. That's not necessarily intended for first-time home buyers. However, the zero down payment option and the geographic location definitely make it an ideal option for people that are just starting out and may not have a lot of money available. And just like this, it is a government loan, so there is a fee for it that we can finance into the loan. And then it doesn't have mortgage insurance, but there is a monthly fee associated with the USDA. That's usually a little bit less than what you would pay for mortgage insurance. Okay, Jim. Mishta Mortgages. This is a program that you can tie to any loan program. This Mishta in and of itself is not a loan, is not a mortgage. It's a grant program. Okay, Mishta will grant you, Michigan State Housing Development Authority will grant you up to $10,000 in down payment assistance. And I have that should be a comma, I apologize, guys. It's up to, depending on the location, up to $10,000 in down payment assistance. This is a grant. It does have to be repaid. However, it's non-interest bearing. So as long as you hold that mortgage, you don't have to repay the loan. The minute you sell the house, the minute you refinance, or the minute you finance or you pay off the mortgage, you do have to pay the money back. Now, the grants can be paired with all loan products that we offer for the most part, conventional loans, FHA loans, and USDA loans. We can use this to help fund the down payment and to fund the closing costs. The only real stipulation for this regarding funds from the borrower is there is a 1% minimum contribution for the borrower. So if you bought a $200,000 home, you would be required to put a $2,000 down payment on the property. And then the rest of the down payment and the rest of the closing cost could potentially be taken care of from that grant from Michigan. Okay. Another good thing regarding this is that interest rates and costs are fixed by the state of Michigan. So it doesn't matter which lender you go to. We just happen to be one of the top lenders, and we're able to close them in a lot shorter time than a lot of other people out there that do them. But the rates, the fees are fixed by the state of Michigan. So it doesn't matter which lender you go to, they're all going to be the same. There are income limitations to this, just like there are with a few of the other loans. You can't make too much money, and the maximum purchase price for a single family home is $224,500.
I call it the sprinkles on top.
So I mentioned this before, the Good to Go Loans commitment. One of the things that, when you're looking for a lender, and this isn't just for using me, when you're looking for a lender, same thing with a realtor, you need to find someone that you can trust, that you can count on, that you feel is going to be straight, is going to be open, is going to be honest with you. You'd never want to use a lender that's going to give you an approval if you don't send them your documents. I know people, it's a pain in the butt. You have to send in your mortgage documents to get approved. There are lenders out there that will approve you without pulling your credit. There are lenders out there that will approve you without you sending your documentation in. You have to do this. I can't stress how important it is. So we get your application, we get your documentation. Me as the lender or as the banker, we review everything and we can issue an approval. Well, there's another step of security in this process, and in a very competitive market, we did it a lot over the last few years. It helps make my clients stand out, is the Good to Go Loan Commitment Program, where we take it a step further. After I get done with the application and reviewing the documents, we send it to an underwriter, and an underwriter will review and essentially conditionally approve you for that mortgage. So when you are going up against a multiple offer situation, or you're out there looking and you put an offer in, and I call that listing agent, I let them know this is as good as a cash offer. They have already been fully underwritten. We have verified employment, assets. This is only subject to the appraisal, title, and re-verifications. And when I say re-verifications, each document is time-stamped. So stuff like newer pay stubs and newer bank statements if available, that type of thing. So that's the Good to Go Loan Commitment Program. Not very, very few lenders actually offer this, but it's a very, very good program to help you stand out against the competition.
And I will comment that I have won against cash offers with this Good to Go program.
The second look program is something that we offer. I've never heard of any other lender offering this. I don't know, Jim, if you have. But the second look program is something, if you guys are out there and you're already working with another lender, I want you to work with me, but you definitely don't have to. But if you are working with another lender, It always helps, as Jim mentioned earlier, this is the largest, for most of you people, most of you folks, this is gonna be the largest purchase you're ever gonna make up until this point in your life. And you're gonna try to finance it for the longest period of time, unless you own a boat or something like that. You know, your car loans aren't gonna be for 30 years or anything like that. So it definitely makes sense to have multiple lenders look at your situation and see what they can offer you. So if you're out there, you're working with somebody already and you want a second look, you want me to maybe take a look at it to see, hey, Joe, can you do any better? I'll give you you fill out the application, some of your docs, you'll receive a $100 Home Depot gift card for no charge, no obligation. You don't have to use me or not, just for allowing me to work with you. I will tell you this, we win 94% of the second look offers that we give out. That means I'm able to beat 94% of the deals that come to me, whether that's an lower interest rate, lower closing cost, or usually what I like to do is a combination of both. I want to beat both their closing cost and their interest rate. Okay. So it also helps Jim too, right? If he trusts me, he's referring me, you're working with another lender, it also helps Jim be a little bit more confident if you're working with, just say Wells Fargo, since they just pulled out of the mortgage business. Well, if you're working with Wells Fargo, it gives him a little bit of a reassurance that, okay, his preferred lender looked at it, you guys are good to go. If nothing else, I give you maybe some more financing options, something that maybe meet your financial goals a little bit better than the lender you were talking to. Okay, Jim. I'm going to go through this really quick. I don't think it needs a lot of detail. Just know we are a small local lender that operates right now primarily within the state of Michigan. Up until this year, we were only in the state of Michigan. All our services are in-house. We don't outsource anything. I am the lender. John Adams Mortgage is funding the loan with our money. It's not a broker. You know exactly who you're going to be working with from day one up until you close. Okay. So, but we're very proactive. We take detailed applications. We get all your documentation. A lot of what I do is education based. And if anyone, I know I've worked with Raven before and with Elizabeth, a lot of what I do is education. So always, you know, I treat my clients the way that I want to be treated when I'm buying a house. And then also the follow-up. We're a team. Me, you, Jim, the title company, Jane, everybody, we're a team. We need to make sure to make this as smooth and as easy as possible. We all need to be on the same page. We all need to get those updates. And I think you can go ahead, Jim. And I think this is primarily what I just went over a lot too with that last slide. We're the experts. We do this. We've only ever done this. We're not a large bank or credit union that we're only doing mortgages because we have to, right? That's why banks and credit unions do mortgages. They don't do them because they want to. They're not designed to do them. They do them because they have to, because their clients are requesting it. All our services are in-house. Again, that's very, very important. I'm not a broker. You know who's actually writing your mortgage. I'm accessible. You can come into my office and sit down at any point in time. We can have an appointment, and I'm held accountable. I'm 100% referral based only. If I didn't do a good job, I wouldn't be getting any business. If Jim or Jane referred you to me and I did something you didn't like and I rubbed negatively off on them, I'm not going to be getting any more of their business. And that's how I base my business is I'm 100% referral only. And again, we're local. Jim might be able to talk to that a little bit, but I know in this last couple of years, local really made a huge difference on getting an offer accepted. Yeah, so I'm good. Yeah, I'm good, Jim.
Yep. Thank you very much, John, or Joe. I don't know what to say. It's John all of a sudden.
You've done that before. Now you're doing it all the time. It's all right. I've been called worse.
Thanks, Joe. Appreciate you for sure. So Jane's going to go over a little bit about now that you get pre-approved, found your agent. Now that you got pre-approved, now you get to start identifying your criteria.
And I think you're doing the John because it's Joe with John Adams Mortgage. I think that's.
Yeah, I think so.
Joe with
I get a lot of clients that do that, and
Yep.
I understand. And for Jim's case, we're just going to chalk it up to old age.
Exactly. Sounds good to me. So the next thing you do once you've decided, moving forward in the house buying process, and you've got your mortgage, your financing laid straight, your mortgage pre-qualification, so that you know your budget. You figure out what you want and what you're looking for in a home. You talk with your agent about what you're looking for. We provide ourselves a questionnaire. Most agents do, and what we have, but what's unique about us is we'll give you a questionnaire, and if there's a second decision maker, we'll also give the other decision maker a questionnaire. We ask each person involved to fill them out separately, and then we bring them together and look and kind of try and highlight what's the most important things. You know, the key is, unfortunately, we all have a budget, and so you're not going to get everything in a house that you want. You're going to find the house that when you see it, it really speaks to you and checks off most of those check boxes. But you do need to go through and kind of figure out, okay, what are necessary and what are nice to haves, and prioritize those. So we help you through that. And I think, you know, we've always had people be able to find one that really makes them happy. So the next step with finding your home, you know, once we get you figured out, narrow down what the most important things are, we put you on a specialized search engine that we can create, which will email you on a daily or weekly basis, or even as soon as stuff comes on the market, when things that come in your geographic area that fit your parameters show up. And if you really like something, you should let us know, or let your agent know as soon as possible. Even though some pockets, some areas have slowed down, it's still a seller's market, and especially homes that are updated and priced correctly are still moving very fast. So if there is something, that's why you want to have your financing lined up, so that if you do find something that really speaks to you, you're prepared to put a strong offer in right away. Then we will go ahead and schedule the showings for you, take you, go see it, and help you, like Jim said, run any CMAs, or your agent will do that, so that you can understand if it's priced fairly. And it's always important to consider the location, the neighborhood. Really stress to clients, can you see yourself living in this house? Can you see yourself living in the neighborhood? And it is a good fit for you long term. And so then the next step in the process is you submitting an offer. As I said, again, it's good to put in your strongest and best offer as soon as you can. One of the most important things is to have an agent who communicates well, who will be proactive for you and really speak on the best. We've actually gotten clients who have in the past submitted offers with other agents, and none of them got accepted. And the reason they finally got accepted is because you need an agent who's really going to not only, you know, talk to the listing agent before submitting the offer and find out what's important to the sellers and find out what to put in the offer, but also after it's submitted, talk with them, be proactive. That's another reason to work with a really good lender too, who communicates as a listing agent in a multiple offer situation. It's so much better when you have a lender for an offer where you know the lender is going to be on top of it, has pre-qualified their buyers, and really is going to help you bring the table to close, or the deal to the close, to the table. So, and we can help you with, you know, in the end, it's the buyer who decides the price that they want to offer, but how much the house really speaks to them and what it's worth to them. But we can help you doing that with running the comparatives. And then once the offer is accepted, there's always still a negotiation, help you with the terms, the price, and contingency. And that's the most important part about the bringing it to close, is working with the other agent and getting a good deal for both sides.
And there are some deals that are out there too, so.
Mm-hmm. And then, so we still are seeing multiple offer situations, and that's another time when it's very important to have a strong agent. We'll help you, you know, walk through what's your best offer you can put forward. And if you are going over the asking price, you might need an appraisal guarantee. If you pay cash, you do not need an appraisal guarantee. But if you are paying using financing, let's say you put an offer down on a house for $100,000 that was listed at $80,000. If it comes in as a value of $90,000, you will not be able to get a mortgage for that last $10,000. So there'll be what's called an appraisal gap. You can either offer to bring cash to the table for that. We can go through that in detail if that ever becomes a scenario, but that's what that is. There's also a tool called an escalation clause where you can put an offer in and say, we will pay, we're going to offer full price at, let's say the house was listed at 100,000, we're going to offer 100,000, and you can say we would be willing to go up to 120,000. So if you can show us any offer for over 100,000 up to 120,000, we'll beat it by 5,000. So there's some tools we can use so that you pay what you need to pay to win the house if you're comfortable with that, but no more than you absolutely have to pay. So there's some creative things that we can work with. And again, communication is key here, and talking to the listing agent. And we've been able to get a number of offers accepted this way. And so then once what's next after they accept the offer is you receive a copy of it. Both sides sign it within 48 hours. You need to put down the earnest money deposit, which is usually 1 or 2% of the price of the home, but that's decided when you write the offer. You can decide how much money you want to put down. And basically that's just showing good faith that you do intend to buy the home, and that if the seller is going to take the house off the market, that you do fully intend to go through with the house to close. And then you start working back with your mortgage lender again to get everything lined up for getting your financing. And you will get an inspection scheduled. We never recommend waiving an inspection. It's always crucial to make sure there's no significant cost structurally or what have you that will come and surprise you later. So we always recommend getting an inspection. And then the post offer task, I think you were going to do those.
Yeah.
Jim.
So now the next part is to Jane's point, is we always suggest that you get an inspection done on the house. Usually when you look at the house, you really only look at it for anywhere from 10 minutes to 45 minutes typically is when you look at the house, whereas an inspection in most cases takes anywhere from 1.5 to 5 hours, depending on what size the house is and to the degree of the inspection. So we usually do it within 7 days. Sometimes it's quicker when it's a multiple offer situation. And we write that all up in the documentation. The inspection costs could be anywhere from $300 to $700. Some cases it could even be more, depending if it's a well and septic inspection and so on. Once the inspection is complete, you'll get typically an inspection report either that same day or within 24 hours after the inspection. That's a detailed report. And we usually have a couple of days to decide what you want to do. And there's really 3 different things that you can do during the inspection process. You can actually, after reviewing the inspection or being a part of the inspection, you could either tell the seller, okay, I'm good. I don't want to fix anything with the house. Let's move forward on to the appraisal. Or you can go, hey, Mr. Seller, I would like to continue to buy the house, but I want you to fix A, B, and C. Or the third thing that you could do is say, oh, heck no, there's too much wrong with the house. I don't like the foundation or what the roof is going on. I would like to back out. So you can back out during the inspection period and get your full earnest money deposit back, and we can get you out of the house. A lot of people ask, what should I ask for or what not I ask for? Is typically, you ask for the major things or things that we don't see when we typically look at the house. If there was a broken outlet or something like that, we typically don't ask for that type of a maintenance thing. But if there's something major that's wrong with the house, we absolutely ask to have those things repaired by the seller. But again, at the end of the day, as your buyer's agent, they would represent you. And ultimately, if you want something fixed, we would represent you in what it is. We just give you the best, because you don't want to give a seller a laundry list of things, because that turns them off and you wind up getting nothing fixed, and you could wind up backing out of a house when really it wasn't necessary. So really, we try to typically go after the major things that cost money, that will help get that home for you. So good. Next process is the appraisal that we get into there. The appraisal is the next step once we get past the inspection. Kimberly was talking a little bit about an appraisal process. A lender requires an appraisal to be done. It helps determine the value of the home. And so once they go through the appraisal process, usually the lender will ask you to pay for that. I think the prices are up now to between $550, $600 for an appraisal now. Right around that cost. Is that right, Joe? It's right around that price.
That's around the average. I'd say an average $550 or so.
Yeah.
Each program is different. Some are controlled by the government and they're fixed. So yeah, but that's a good estimation. It also depends on the type of property, where it's located, anything special about it. So
if the appraisal comes over what you offered on the house, for example, if it's a $350,000 house and the appraisal comes in at 360, nothing happens other than the fact that you just gained some extra value on the house. You already have $10,000 worth of equity on the house. However, if it was to fall short and come in at $340,000, then what we would do is we would go back to the table and renegotiate those terms for you on your behalf, especially if you didn't give an appraisal guarantee on the home. We would go back and negotiate with the seller to get it at that $340,000, and then it becomes a negotiation. And again, if the buyer and the seller doesn't come to an agreement of terms, at that point you could still back out of the home and get your earnest money deposit back. Okay. And then the final thing, the big thing, is an appraisal waiver. On occasion, when it's certain conditions that apply on homes, and typically you got to put 20 to 25% down on a home. It also has to have a lot of real estate sales within the market to help determine it. But sometimes a lender can give you an appraisal waiver on the house, which means you don't have to pay for an appraisal, and whatever value that you purchased the home at, it'll come in at that value automatically, which is a really cool thing. That happens once in a while. It doesn't happen all the time, but it's there. And if the market exists with the potential of an appraisal waiver based on the conditions, I definitely would ask that for you on your behalf. Title search, just a quick thing. That's another thing that runs behind the scenes for you. Nothing that you have to do, but something that your agent follows up with the title company. The seller has to provide what they call a clean deed. Provide a deed that's lien free, that there's no encumbrances on the lien. They provided title insurance to ensure that, to be able to provide clean title to you, and then you have to pay for title insurance to provide that same clean lien to the mortgage insurance lenders or mortgage lenders. So if it's a cash sale, then it's just the seller that provides you that clean title search. But when you're getting a mortgage, you also are required to get that for the mortgage lender. And if the seller has any issues, that we allow them to fix that before we back out of it. But they do have to provide a clean title for you prior to closing. The title company will not let it close for a full warranty deed until everything is good. Then step 8 is the closing. Once everything is all set, you get your insurance, everything is good to go. They submit your loan to final underwriting. They issue us a clear to close. Excuse me. They issue us a clear to close, and then we can schedule the actual closing. So sometime during the closing prep, though, a lender may ask from us additional information that calls some conditions that come up from underwriting that they may ask you. They definitely want you to get your homeowner's insurance. They send you what they call a final CD for you to review. This is a really close estimate of what your down payment closing cost is, but still not 100% until the title company does that for you. And then we schedule the actual closing. You obtain your certified funds. The thing that you want to think about is your change of address, utilities, and then guess what? You get to start packing and get ready. You're that much closer before you actually get your home. So some pre-close things. Jane, were you covering that one?
Yep, I was going to cover this one. And there's been a few questions in the chat that I've been answering as we go too. So
awesome.
But yeah. So then, the last thing to remember, and especially for sometimes we run into this with new home buyers, I don't think we talked about this before, is once you've gotten pre-approved for a mortgage and you've started down this path and you put an offer in a house you're really interested in, you don't want to go out and buy a brand new Jeep at the car dealership. That's going to, if you lease a new car or if you buy a new car or something like that, that's significant to your debt to income ratio, that's going to change your credit and hurt with the process of getting ready to close financially. So, and if you have a good mortgage person, they'll walk through you with all of that in the beginning when you are getting pre-approved. But so in keeping that in mind, you know, with the closings, there are some costs that you want to make sure you've budgeted for. Closing costs are going to about 2 to 3% of the loan amount in total, which includes, and then there's, you know, your earnest money, the inspections, depending on how many inspections are required, can be $300 to $700. There's the home inspection. If a house is on sewer, we always recommend getting the sewer line inspected because that can be a significant cost after you close if you find out that there's tree roots in the sewer line or that has to be dug up. And then also sometimes there's radon inspections and other inspections, a well or septic, if it's on well or septic. So you can choose which one of the ones you want to do. Those run $300 to $700. And then there's 1 year of homeowners insurance, and then you want to have some reserves if there's any improvements or repairs that need to happen and for you to move in. And then just before the close, your agent will go through you and do a final walkthrough of the home, just to make sure everything was in the same condition as when you originally put the offer in on the house. And then finally, for close, you need to bring funds, certified funds made out to the title company. Oftentimes, you will have you can either bring a cashier's check or they will be wired depending on the title company you're working with. And you always get instructions for that directly from your title company and work with them on that, because there is some wire fraud around these areas. We want to be careful about that. And then any other documents that have been required by your lender and a valid government ID. And then at the closing, you get the settlement statement. You get to sign a lot of documents, and then clean title to the home and your keys for your new home. And so then your last step is to move in and enjoy the new home. And so, Jim, I think you were going to speak a little bit about this.
Yeah, so just to kind of wrap up, just to talk a little bit about how Jane and I work in our businesses. We work, 95% of our business is working by referral. We've always believed that relationships are so much more important than transactions, and in giving exemplary customer service from the top down. So we work really hard, not only for our sellers, but for buyers too as well. And we have a really deep vendor list of people that we can refer to you. And I'll tell you, I would not personally put my, refer anyone that I would not put my own stamp of approval for, because I've always been a big believer that if I refer this person, that's on me. So anybody that I would refer to you, I would want to make sure that they do an awesome job for you. So we work really hard at having a great vendor list for you. We work hard at giving you and providing you great service. And if we do that, then obviously, you would refer us to your friends, family, and colleagues at work. And that is probably the best compliment that you can give us, is by referring it. But that's where we're doing a lot of businesses, because we work strictly by referral. We don't pay for leads, we don't pay for ads. And the cool thing of working for us is we also give back, not only to the local community, but also give back to our clients too as well. We usually hold about 4 client parties a year. We have informational stuff like we're doing tonight. We're doing about 7 of these this year for different kinds of things, from how to sell your home, estate planning and things like that we're doing throughout the year, taxes. We also send out some great information in real estate every single month, if you'd like to be added to that too as well. So that's just a little bit about us and the kind of things that we do with the Altene team. So, and so really we're down to, going through some questions. I did see, it looked like we had some interaction here. Does everything was answered that was on here? I know William Harvey talked about this. Great. So anybody have any questions?
Yes, Bill Harvey. I got answers to my questions. They're good answers. Thank
So,
you.
fantastic. Okay. So does anybody else have any questions that they would like to? I mean, we can definitely hang around and talk to you even a little bit more after the session. But if anybody has any questions that you would like to pose to the group as a whole, we're here for you. We wound up with about 11 people on the call throughout as a lot of people jumped on a little bit after we got started.
So I'll ask, add one more question. Can you say something about the status of the current market?
Yes.
A year ago, it was hot as Hades, and
Yeah.
you know, you had to offer obscene amounts of money instantaneously.
Right.
Then interest rates went up. So what's it?
Yes, so this is one of the first slides that we did. You probably jumped on a little bit,
I'm sorry.
a little bit later, but that's totally fine. I want to make sure that before you leave that you also have. So yes, those days are virtually gone. Where every single home, no matter what home I put on the market, whether it needed a ton of work or if it was nicely updated, we usually had it sold. My market strategy was this: we put it up as coming soon on Monday. We went live on Thursday. We had multiple offer announcement by Saturday, and we were going over anywhere from 5 to 15 offers. I actually had one house that had over 25 offers on the house, where it was anywhere from 10 to 30% over asking at one point. That's how crazy the market was at one point. Well, then interest rates soared here about 4 or 5 months ago to near 20-year highs, where we hit 7 to 7.5%. That kind of stalled the market and changed a little bit, kind of freaked everybody out at first. And then we've been kind of slowly settling back down to 6. Like right now, Joe said that he did it, someone this week, even below 6. It's been kind of like an average 6.5% based on credit scores and all of that in there. So what has kind of happened now since October, November, December, and now into January here is those houses that are beautifully remodeled and priced right, believe it or not, they're still going with, you're getting it at list price or above list price. And in some cases, 2, 3, and 4 offers within now 14 to 20 days versus the first 7 days. So some of those homes are still going fast. Other homes that need either a tremendous amount of work or has not been updated in the last, 20 years, if they're not pricing it accordingly now in this market, they're typically sitting on the market a lot longer, and you're going to get that. You're usually going to typically get that as a good deal. So what used to happen can't happen now. So you actually get penalized for not having an updated home today, whereas before you weren't getting penalized. So you can't, a seller can't say, well, my house, the homeowner next door got this price for it. And when we look at the inside of that home versus the inside of their home, if it's not the same, you're not going to get the same price anymore. At least that's where the market is. Now, here's what's forecasted over the next 12 to 18 months. The investors, the ones that are putting out the money for loans right now, they're telling us that the interest rates are going to start falling again a little bit by little bit. It's not drastic, but a little bit by little bit. They're kind of guessing that we're going to be back down to 5% or sub 5% getting in the start of 2024 next year, even though the values of homes are still going up. So what we're kind of talking about right now is this is probably one of the best times to buy, because you're not dealing with, especially a home that needs a little bit of work, but it's a solid house. You're not dealing with spending, to your point, like 10 to 30% over asking anymore. You could turn around and get a house at list price or below list price today. And then if interest rates do fall like they're forecasting, then why don't you refi it in a year from now so it doesn't turn into a seller's market again? Because typically a good strong market is when interest rates are between 4 and 5%, when it becomes still a strong seller's market. I seriously doubt we'll ever see much of sub 3% anymore. That was kind of like a fictitious interest rate that came out during COVID when when the government was trying to make sure that the real estate market didn't die during COVID. So they put in these artificial interest rates that were getting a little bit crazy, that really drove the market absolutely nuts and bonkers, and they had to slow down that market, and that's why we had this big correction that we had. And it actually went up a little bit higher than they expected because of high inflation and things like that, but that's a whole nother subject. But that's kind of like the forecast right now. And believe it or not, home pricing, the forecast over I would say by April 1st, between now and April 1st, they're actually forecasting for Southeast Michigan for the values of our home to go up another 5.4%, by the end of the first quarter. And they're actually expecting now the value of our homes to be anywhere up above 8% by the end of the year. So that's where, again, if you're thinking about buying a home, now might be the time to start looking, as this could be a really great time to do it, and then refi with a cheaper interest rate in a year from now. So hopefully that kind of answered your question a little bit.
Jim, can I add to that?
Thank you.
Jim, are you okay if I add to that a little bit?
Yes, you sure can.
So one thing I want to tell you, and we had a conversation, we had a team meeting within John Adams, and we do quite a bit of business within the state of Michigan, and we have a few bankers that are in the top 100 in the country as far as number of loans that they close and dollar amount that they close. And on average, I would say through all our bankers, we got about 35 bankers, about 90% of all our buyers have put shopping for a home on hold, waiting for the interest rates to drop. So I will tell you, there was a lot of people in 2021, towards the end of 2021, because everyone was predicting the home crash, a big bubble was going to pop again, all these foreclosures. So they were waiting for this to happen. And then what happened? Interest rates dropped even more, value went up even more. You're starting to put $40,000, $50,000, $60,000 over asking. That home that my clients, this is a real life example, the home that my clients were looking at for $500,000 in the fall was $575,000 come spring, come summer. So what I want to say is, if the rates, if our company has 90% of our buyers waiting for rates to drop, I can pretty much tell you that's going to be standard for all mortgage companies throughout the United States, at least throughout Michigan. Once rates drop, you could have the same situation that we had before, where all of a sudden you got an influx of buyers coming in. And remember, we're in a historically low inventory situation as well. So even though the interest rates may not be as low, 3.5, 4, we could still have the same level of competition if you wait for the rates to drop, because everyone's going to come flooding in the market, and we're going to have even less inventory now than we did the same time last year, which could make situations worse for buyers get a little bit more frustrated, maybe get out of the market. So now's the time to buy, in my opinion. Now is always the time to buy. But think of it this way: if you give me a contract today, accepted offer today, we close a month from today, we close February 12th, February 12th. Your first mortgage payment is until April 1st. You're making 6, 7, 8 monthly payments on your mortgage before you're in a position to refinance again. If the interest rates drop in the time frame that the investors think they're going to drop. So there's a saying, I hate it, but I'm going to say it because it makes sense. Date the rate, marry the house. You might hear that a lot. So if there's a house that you like that checks all the boxes, now is the time to do it. Even Dave Ramsey, whether you like it or not, he's saying now is the best time that there's been in a long time to buy a house, because we have decent inventory. Even though it's low, we still have decent inventory, but there's no competition out there between buyers. I wrote 4 loans this week. Every single one of them was their only offer on the house. That says a lot. Where this time last year, or even 6 months ago, every one of those would have been a battle, and they would have been one of 10 or one of 15 or one of 20 offers on a house that we'd have to go to war to win. So take that for what it's worth. And I'm always available if anyone has any questions. I don't care. You want to know about the market, just like Jim. Jim's always going to be available to you. You want to know about the market, please feel free to reach out. But that's my 2 cents.
And that's the cool thing about our team. So too, Bill, is that we don't mind if you call. We don't. We just like to be the local expert, try to find as much information as we possibly can for you. And if I don't have the answer, I'll certainly go get it for you. feel free to call. There's no obligation whatsoever for us. If you use us, awesome. If you decide not to, awesome. You have that right to pick and choose who you would like to use. And I just want to let you know that I'm just here to help you any way that we can. So.
Okay, thank you.
No worries. Does anybody else have any questions? Okay, I guess we're pretty good. I just want to take this time to thank my team, Maria that was on the call, Jane, Joe, thank you so much. I actually said it right, Joe, this time instead of John. Thank you, Joe, for your time to help us out. Thank you for all of you to be on the call today. And if you do need any help, certainly you can reach out to us further. You can reach Jane at either janek@alteneteam.com or myself at james@altene.com too as well. And we're certainly more than happy to help. Thank you so much. Hope you guys have a great week, and hopefully we'll see you soon.
Thank you.
Bye,
Thank
everyone.
you.
Thank you.
Bye, thanks.